I would like to use this first video of 2015 to wish all our readers and viewers a very happy and healthy new year. The volatility of equity markets around the world increased significantly from mid-14, with the exception of the China market, the Japanese market, the Indian market, the New Zealand market. Investment returns across most markets in the last 6 months have been disappointing. The Australian market, as measured by the ASX 300 Accumulation Index, which assumes reinvestment of dividends, was up less than 2.4%. The 50% decline in oil, the 26% decline in iron ore, the 11% decline in copper, and the 13% decline in the $8 US dollar exchange rate confirmed the view that the resource super cycle is well and truly over. The Montgomery funds have been fortunate to weather this negativity very well, and our reasonably large cash holdings have certainly helped. Both the Montgomery funds exceeded that broad benchmark by over 5 percentage points, with the private fund putting on 7.65% and the Montgomery fund 7.44% after expenses. By far the most important news in the last year has been the declining yield on government bonds. Some of these yields have hit a low that I think is illogical. Over 2014, US 10-year bonds declined from 3% to just over 2%, German from 1.9 to 0.7, UK from 3 to 1.75, and even Aussie from 4.25 to 2.7. We wonder aloud what the ramifications will be if there is a sea change in Greece with the upcoming snap election. The far left look as though they're likely to win government, and with that they may want to leave the euro. Will they be repaying euro with deflated drachma or not repaying at all? This has very serious ramifications for the eurozone and for the European banks and for peripheral Europe. Apart from the material sector and the energy sector, bricks and mortar retailing seems to be under the pump domestically. Consumer confidence is poor, wages growth is low. Individual stocks on many occasions have been treated harshly. As I said, we've missed a lot of the negativity, but we're looking around for some great opportunities that we think will present themselves in the near term. The Financial Services Inquiry recently certainly presented some opportunities, and we increased our exposure to the banking sector on the back of that. I'm convinced on very low growth in China and deflation in Europe, the monetary policy will stay easier for longer. I'm also convinced the Reserve Bank will probably cut 2 more times in the first 6 months of 2015, and that will put a floor under the Aussie market. Thank you for your time. Please enjoy 2015, and please continue to follow us on Facebook and Twitter.